The Canadian dollar CAD strengthened as oil prices rebounded, and the US dollar weakened following softer-than-expected USADP employment data. Higher crude oil prices boosted confidence in Canada's export outlook, while weaker US labor market figures reduced support for the greenback, allowing the Canadian dollar to gain ground. Canada is one of the world's largest oil exporters. So, rising oil prices generally support the Canadian dollar by improving export revenues and strengthening the country's trade balance. At the same time, disappointing ADP employment data raised expectations that the Federal Reserve could adopt a less aggressive policy stance, putting pressure on the US dollar and benefiting currencies such as the Canadian dollar. Though, looking ahead, the CAD's direction will depend on whether oil prices continue to recover and if upcoming US economic data confirms signs of a cooling labor market. Strong Canadian economic indicators and a stable outlook from the Bank of Canada could provide additional support, while renewed US dollar strength or another decline in crude oil prices may limit further gains. For Forex traders, the key events to watch are crude oil price movements, Canadian inflation and employment reports, Bank of Canada policy announcements, US nonfarm payrolls, Federal Reserve decisions, and overall market risk sentiment. These developments will determine whether the Canadian dollar extends its rally or gives back recent gains. Stay informed, manage your risk, and follow for more daily Forex market updates.